Welcome to The Explainer. Today, we've got a real head-scratcher for you, coming from the energy giant Cheniere. It's a story packed with conflicting signals, and together, we're going to figure out what's really going on. So let's kick things off with a big question, one that really gets to the heart of investing. When you see a stock's price dip or jump on any given day, what is it actually telling you? Is that the whole story, or is it just one page in a much, much bigger book? I mean, check this out. On August 22nd, 2025, Cheniere Energy basically gave the market whiplash. On the one hand, you had the stock having a pretty rough day, but on the other, the company's actual performance was, well, it was knocking it out of the park. So what gives?
All right, so let's start with clue number one, the daily market data. You know, the stuff that on the surface looked, well, not so great. This is what you'd see if you just glanced at the stock ticker.
So the first thing you'd notice is the stock price. It dropped. Specifically, Cheniere's stock, that's ticker symbol LNG, closed down 1.27%. You see that and you think, okay, bad day. But here's where it gets kind of weird. This price drop, it happened on super low trading activity. I'm talking volume fell by more than a third, down to just $340 million. It suggests there wasn't a big rush to sell. It's like the market was whispering, not shouting. And because of that low interest, Cheniere got pushed way down the list of actively traded stocks. Being ranked 303rd meant it was pretty far off the radar for that particular Friday. So if you just looked at the stock market for that one day, you'd probably think, yikes, things are not looking good for Cheniere. Okay, but that's just the stock price, right? What was actually happening with the company itself? This is where we pop the hood and take a look at the engine, the company's fundamentals. And whoa, what an engine it is. Get this, in her latest report, the company's revenue had shot up a massive 42.8% compared to the year before. I mean, that's not just good, that's incredible, explosive growth. And they weren't just making more money, they were keeping more of it too. Their earnings per share hit $7.30. That smashed what all the Wall Street analysts were expecting. That right there is a huge sign of a super healthy, profitable company. So strong performance now is great, but what about the future? Let's look at our next clue, which is all about how Cheniere is setting itself up for the long haul, because a company's real value is tied to the future it's building. And wow, their game plan is seriously impressive. They locked in a huge new sales deal with a Japanese energy company, they're dropping almost $3 billion to expand one of their facilities, and they're riding the wave of a massive trade deal between the EU and the US. So, you see, these aren't just little tweaks here and there. This is a company making big strategic moves to make sure they stay the #1 player in American liquefied natural gas. They're not just playing for this quarter, they're playing for the next decade. Okay, so we've got a company that's performing great and has a solid plan for the future. So, what do the experts think? You know, the financial analysts, our expert witnesses in this mystery. What was their take on all this? Well, they were definitely seeing the big picture, not the one-day blip. It was a massive vote of confidence. You've got major firms, Scotiabank, Mizuho, Jefferies, all basically saying this company is a winner. They raised their price targets and upgraded their ratings to buy. And this chart really drives that point home. Just look at those new price targets from Scotiabank and Mizuho. They're way higher than where the stock was actually trading. They're not just saying it's good, they're saying we think it's going to go way up. All right, so now we have all the pieces of the puzzle on the table. We've got the weird daily stock drop, but we also have incredible company performance, huge future plans, and rave reviews from the experts. So let's solve this thing. What we're looking at here with Cheniere is a classic textbook example of short-term noise versus long-term signal. That little dip in the stock price, that was just noise, the random ups and downs that happen every single day in the market. The real signal, the thing that actually matters, was the booming revenue, the smart expansion plans, and the thumbs up from the analysts. Okay, so we're calling that daily dip noise, but what does that noise really feel like if you're caught up in it? Well, the source material had a pretty cool way of showing this. They did something called a backtest. It's like a simulation where you see how a trading idea would have worked out in the past. And this one was all about short-term trading. And look at these results. They really paint a picture of just how wild the short term can be. Yeah, overall, the strategy made some money, but check out that return range. On any given day, you could be down more than 4% or up almost 5%. It's a total roller coaster. And that is the very definition of market noise.
So what's the big takeaway from all of this? It's that a single day's stock price almost never tells you the whole story. To really get what's going on with a company, you've got to look deeper at its actual performance, its plans for the future, and what the pros are saying. It's all about learning to tell the difference between the daily market weather and the long-term business climate. And that really leaves us with one final question for you to think about. The next time you look at a stock, are you just watching the daily weather report, or are you trying to understand the long-term climate? Because figuring that out, well, that can make all the difference.